Hey everyone, welcome back to Corporate Decoder. Today we are diving into Guerrilla RF's latest filing, and let me tell you, this one has some twists and turns that would make even the most seasoned corporate strategist raise an eyebrow. It's like watching a superhero movie where the hero keeps almost losing. This prospectus talks about the selling of shares by some stockholders. Guerrilla RF isn't getting any money directly from this sale, but they might get some if people exercise their share warrants. Now, let's address the £1,000 gorilla in the room. Risk. Investing in Guerrilla RF is not for the faint of heart. The company lists a whole host of potential problems, from not being able to pay debts to not being able to keep key employees. Guerrilla RF is walking a tightrope. They might not be able to generate enough cash to service their debt. Dead future success hinges on creating new products that customers actually want. If they don't, they are in trouble. The biggest issue with them is that they rely on a very small number of customers and distributors. The numbers are alarming. Almost 80% of their revenue comes from one single distributor. If something happens to that relationship, it would hurt their business badly. They also rely on trade secrets. Trade secrets are very hard to keep nowadays when hackers are getting more inventive. If that proprietary information is stolen, it could seriously hurt them. Their revenues have been concentrated in a relatively small number of large end-user customers. On top of everything, there is more external factors. General downturns, trade tensions, etc. could negatively impact our business and share price. That's not all, folks. Turns out that they have issues with their internal control over financial reporting. Their accounting might not be up to par. The alarm bell should be ringing. Accurate accounting, not guaranteed. Let's take a peek at the numbers, shall we? Product revenue is up to $20, $1 million, and is not too bad. Gross profit $12.8 million is also quite healthy as well. The real story is the net loss of $10.8 million, which is the most important indicator that they are not making any money. The health of a company can be found on their balance sheet, so let's look at that. Cash $79 million is down compared to last year is $781,318. Accumulated deficit of $53 million. The good news is they are still kicking with some fresh funding from Northrun, a capital investment company. However, there's a big catch. Northrun now owns a big chunk of the company. Unlike other successful companies, they did not go through a traditional public offering which would allow them to attract more attention. As an emerging growth company, they have several exemptions for a few years. Let's not forget government regulations. Regulations always adds a layer of complexity. To summarize, their concentration of sales makes them extremely vulnerable. We may see a future where faulty products lead to enormous expenses. Also, changes in the government trade policies, including tariffs and export restrictions. The success of their operations is not set in stone, as they operate in a very competitive industry. Being a small company without analyst coverage, their stock is quoted on the OTCQX, meaning investors may experience significant volatility. You have to be very careful when buying stocks here. This section is just an overview of Guerrilla RF. They're a fabless semiconductor company, meaning they design the chips but outsource the manufacturing. They are targeting the automotive and wireless infrastructure markets. They outsource their manufacturing to places like Taiwan and Malaysia. Their business is spread in multiple markets, such as wireless infrastructure, automotive, and catalog markets. They are subject to a lot of governmental regulation. Their intellectual property faces global threats. Here the management will be discussing their financials. Revenue increased by 33.4%, Clopros, profit 63.7% of revenues as compared to 57.1%. Axtable operating loss $8.8 million for 2023. CAM, they seem to be moving in the right direction, but still not making profit. Looks like keeping costs down. Let's see what key metrics they have. They seem to be releasing more products with revenue exceeding 100K. Product backlog is decreasing. They have $8 million. In their previous statement, there were 781K, so that's a 10x. This is not a bad thing. It's because of the loans, meaning the loans should be looked at very carefully. Now, let's zoom out and look at the big picture. Guerrilla RF is in a tough spot. While they have seen some growth, they are burning through cash and relying on a couple of relationships for the majority of their sales. And despite all the best attempts of the management team to cut expenses, this company could be in trouble if the stars don't perfectly align. Now, a few key things to watch for if you are invested in this company would be if their single major distributor were to cut ties and if they can develop more products and customers. These are crucial for its long-term survival. This is a company to keep on your radar. This is not to say that their business will fail for sure. Thanks for tuning in to Corporate Decoder. Did you find this deep dive helpful? Smash that like button and let me know your thoughts in the comments. And don't forget to subscribe for more insights into the financial underbelly of your favorite companies. Until next time, stay vigilant and decode the corporate world.